We're back with you to take a look at our ag commodity trade about an hour into our trading session, actually about 45 minutes in. I'm Marlin Bohling. I'm joined by Chris Swift of Swift Trading Incorporated in Nashville, and good to have you in studio.
It's good to be here, Marlin.
All right, let's go ahead and take a look at this grain trade. Can't wait to hear what you're thinking about this. Okay, going to the board. In Chicago, we have March corn, 2.5 higher now at 3.80 3/4. So it's starting to lift a little bit. We have July 2 3/4 higher at 3.97. That new crop December contract at 4.04 would be 2.5 cents higher. Meanwhile, taking a look at the soybean trade, this is how things are stacking up so far. Still have January down 7, but the March contract, by the way, January expires today, I believe. Right?
I believe so. Today's last trading, yes.
The March contract down 5 1/4 at 9.05 per bushel. And if we jump over to the wheat, now in the wheat, we have Chicago March down 2 3/4. We're at 5.16 3/4. And in Kansas City March, we are now trading that one at 5.03 1/4. That's down 1 1/4. So far, about the only thing with any enthusiasm is the corn. I understand through private sources, now this is different, South Korea bought, I believe, 66,000 tons of optional origin corn from somebody.
Okay.
And then 69,000 tons of corn supposedly through a private sale.
Okay.
So this was not reported through the wires. It wasn't over that 100,000 tons. It wasn't mandatory. So that's just an inkling that there is some business going on.
Oh, absolutely. I think so, sure. We still got a livestock to feed and still got a lot of humans to feed out there. So business is going to continue to be conducted with or without the government, you know, under their guidelines.
Yeah, it makes you wonder just what's really taking place behind the scenes right now. And we may not know for weeks and weeks and weeks.
That's very true.
Okay, so in the meantime, what do we do about the trade here? How do farmers look at this when they're trying to do some hedging or selling a bull crop?
You know, I'm not real sure, but there's not been a great deal of activity in the grain markets. If we look from the initial of the tariffs where we shot the market down a good 25% in value, and that's where we've been ever since. And if you look at corn, it is narrowed into a pencil point triangle. Beans have been sideways, and wheat has just really been doing nothing. It has just been back and forth in a very tight 25-30 cent range for the last month now. So I'm not real sure that, and this time of the year, I think a lot of grain movement came the first 2 weeks of January. Those transactions could have already been made in December, and they were just delivering that grain in January.
Interesting. All right, I want to take a look also at what's going on in the cotton market right now. We'll see how it's opening up today. Right now in cotton, how about this? We have the March contract now 87 points higher at 73.36 cents per pound. It's about 90 points off its earlier low this morning already. And in the dollar value, we were watching this with keen interest earlier. The dollar index still about 50 points lower on the March futures at 95.220. The crude oil trade did back up this morning, and we have February futures coming off of their lows by almost $1 now. In fact, $1 and a nickel. So now we're down 11 cents. We're at 51.48, but we got as low as 50.43 on that West Texas crude. So keep an eye on that. Okay, we'll come back in just a moment, and we will take another look at the markets. This time we'll focus on livestock with Chris Swift when we come back.